Hello and welcome back to a brand new video on the channel. In today's video, we're going to be talking about high time frame FU candles. Again, I have an entry model for the FU candle on the channel, and that is using the 15-minute and the 30-minute. But this is going to be looking for our daily bias and understanding what price is delivering in and what our overall direction of our trade is going to be. So understanding what an FU candle is. So an FU candle is basically a candle that will dive down within a wick and then engulf or close back below or above a range that it was currently trading in. So in this little example, we have bearish price action. So price is pushing down into, let's say, a point of interest or an area of liquidity. We then can look for the next candle, and what did we do? So let's say this is a daily candle. Let's say this is Monday low. Monday low is traded down near a potential point of interest for a reversal. What we then see on Tuesday, start of the day in London perhaps, is where this usually occurs. We drive into the low, into our point of interest, and then this next daily candle closes and engulfs this previous candle. What can we expect after this, or what we can expect after seeing some kind of price candle shown to us like this? We can see a pullback back down into 50% of the range for Wednesday, and then potentially continue higher just by understanding this model here. So this is an FU candle, and this is perfect for our daily bias and delivery. So we need to understand daily low has been wicked out here, and then with engulfed, meaning price delivery is to the upside. We can then see maybe a small pullback and then continue higher for the rest of the week in this example. Looking at this on the chart, we have a perfect example of this on Euro USD right now. So I did say to members, we could potentially go long from here in our premium group. We took this low as an FVG as liquidity, and then what we've seen is price consolidate for a couple of days within here, and then finally we have a breakout to the upside. And what do we see right before that breakout on the 4-hour time frame? We see this pattern that I have shown right here. This is the FU candle shown on the 4-hour chart. What we can then do is go down to our hourly and then look at price of where we could have got in. So initially, what springs to my mind is price could have potentially came back into a discount and we could have got an entry here. And that is actually what I was looking for, but price didn't quite reach this entry within here. We've then gone from this hourly FVG, and as you can see, price delivery completely changed and went to the upside. So that is a perfect example of our 4-hour. So entry would have been around here for this particular trade, and then our stops could have just gone below these bodies, and then obviously your targets will be liquidity. Right, so that's a nice 2.6% example. Moving on, I'll try and find another example that's happened over the last few weeks. Okay, perfect. So what do we see here on the 4-hour time frame? We see this initial wick into the 4-hour imbalance across from here, right? So I'll draw that 4-hour imbalance on. So we know that's our point of interest. What then occurs is we then have this FU candle model. This 4-hour then closes, engulfs this previous bullish body within here. So if we put this as green, we've engulfed this candle. So now we can switch our bias to bearish. So first targets for this would have been this low within here, and then our second targets would have been this FVG on the high time frames, which was a daily FVG. And as you can see, price comes back, it gives us an entry at a discount, no, at a premium into this order block. Stops can go just above the high, and then you can run price either into this low or into the daily FVG low. So that is how simple it is to gain a bias. You need to be watching in London. This usually takes place in London on the 4-hour time frame, but it can occur in New York too. Daily time frame, this is a lot stronger, but 4-hour, it is still possible to be used just for your overall daily bias. So that basically sums up the daily bias and the overall direction figured out by FU candles on the 4-hour chart. You can have multiple pairs and look over this and just see which pairs have shown this kind of setup and strategy. Other than that, the next 10 people that join the free Telegram in the link in the description will get access to my passing prop firm quickly with the currency cartel and how I go about all the prop firm challenges that I take and how our members are getting funded very easily. So other than that, that has been a quick video on daily bias and overall direction using the FU candle model, and I'll catch you all in the next video.